Great.
Is it going to be an earnings recession or not?
No. Look, and I think, now that we're a little tight here, look, 12.7 at the top line. There's going to be some strength in financials, 25%, 64% energy. Consumers coming in at 6%, right? Industrial, 17%. Yeah, pretty good strength. Your real issue is what's coming in the next 3 quarters. Drops down to 4, 4, and 3 handle growth, okay? Here's the deal. Those numbers are not correct. The market has overcorrected in terms of revisions. Mike had a great spot yesterday, talked about this right now, everybody's lowering the benchmark. You've seen this. Over the years, we see this all the time, but I've never seen the ferocity by people trying to get in there and lower those benchmarks. I will tell you right now, the next couple of quarters are not going to be 4%. The market is not even paying
4%
investors.
earnings growth you're talking about.
Yeah, that's the expectation right now. This earnings season right now, they're saying 12.7. It's probably going to come out 15, 16, which is in trend if you get rid of the kind of sugar rush you've got.
What are you talking about 15, 16? I thought we were talking about 7.1% earnings growth for the S&P 500 and then knocking that down to maybe 4%.
No, that's the next couple of quarters. This quarter,
we're doing the fourth quarter now, right?
I'm talking about first quarter. I'm talking about first quarter.
12.7 this one, then the next couple of quarters, first quarter 4.3, next one 4 handle, the next one after that currently about 3.9.
But they haven't lowered those expectations enough. I thought the first quarter
those have been lowered. Those have been lowered, and the numbers are going to come in stronger here. The numbers are going to come in stronger for Q4. I'd say about 15%. All right. The next couple of quarters, you're not getting any value for earnings growth. They've almost priced in recession. This happened in December. The revisions piece was really good. A lot of analysts just jumped on that. What's going to happen is you're probably going to see almost a double of that. Currently, the market trades at just about 15 times. So right now, honestly, the market's cheap from a historic basis on earnings, what you should be getting. And in addition, as long as yields don't go up and as long as we avoid a recession, and I think most people have gotten back to a point where we're going to, your earnings story is a good story, and it's going to be one where you can beat.
Mike Santoli, the problem may be that when companies start giving guidance, they're not going to feel very confident with things, so they're not going to tell you much.
Yeah, I don't think there's a lot of incentive to really talk up the rest of the year. I would argue 15 times is somewhere in the fair zone. I wouldn't say it's necessarily cheap. You were below 14 2 or 3 weeks ago on a forward basis. So I think if you hold that 170 number for S&P earnings this year, we're a little above 15 right now. That's plausible. That's okay. But it's going to be a lot of push and pull inside that number, right? It's not going to be some great theme where everyone says, okay, look, business told us everything's great, off to the races. We're up 10% off the lows. I don't think that bounce of 10% is about earnings, right? So we're still far enough off the highs. You know, we talked about the estimates have come down, 6% since October? Well, the market's down 12% since October. So it's not as if the bar should be very high for this quarter. I just don't know if the market is ready to give a big multiple.
The 2,600, where I sign on for that, was when we were in the depths of our fears.
Our panic.
Our panic. And when we were talking about, well, maybe we test another 2 or 3% down or something. Maybe we get to 2,250. I was just saying, I guess my point was, if I could guarantee we don't go down,
that's right,
30%, I'd settle for 2,600. But now that we've got a better tone,
now the market looks stable.
Now I want 3,000 again. Am I wrong for not?
I don't think you're
wrong.
For 20?
No, am I wrong for not wanting? I mean, okay, in hindsight, the worst didn't come to pass.
Right.
Powell seems to have found at least some religion at this point.
In his words. In his words, not his actions.
We don't know. Well, look at what futures are indicating now. A possible cut at this point. People have moved. But
what are the circumstances economically under which Powell's going to cut? Is it going to be great news for the next 8 months?
I'm not saying he's. I saw some people yesterday saying we've already gone too far.
Right. He's been there for a long time.
Yeah.
Can I make one final point to your point, though? If earnings do beat, and if earnings do come up, you do realize there's a natural, mathematically defined multiple contraction. So earnings come in stronger, and earnings estimates do come in much stronger than the 4-point. You're already in the 14 handle. We're going to drop a full turn to low 14s unless the market goes up. So do you really think
no, the 15 is on forward.
You should have a 14 multiple?
You're going to meet by 7? All right, we'll see.